Good morning, one and all. Welcome to Premier Academy's Law Revision session with respect to May 23 attempt. Myself, Naveen, faculty for Corporate and Other Law. I have prepared topmost important questions which can be expected. You have to study everything, but this is like a revision session which are taken from the past RTP, MTP, and previous attempt questions. This video consists of two parts, part 1 and part 2. This is part 1. Guys, questions we will not be going in chronological order. Question wise, number wise, we won't be going. I'm just going chapter wise, which has more weightage. Absolutely, at the end of part A and part B of the video, that is part 1 and part 2, we will be completing 30 questions. There is no doubt in that. But now, we are going in an order. The chapters which have more impact, more weightage chapters, I'm going to complete first. Okay, let's start. So this question, Geeta Private Limited is a startup company. Okay, private company, startup company. Underline the important words. Pramod has been appointed as accounts manager for Geeta Private Limited. The board meeting for approval of accounts is to be held on 1/8 board meeting. He has to prepare financial statement for approval by the board. So companies about financial statement, what to say? Explain, advise, promote, they are asking. Which chapter is this question from? Accounts to companies. Section 129. What section? Financial statement. Okay, financial statement includes what? Balance sheet, P&L. In case of NPO, we prepare income and expenditure account. Income and expenditure account in case of NPO. Then we prepare cash flow statement. Then we prepare statement of change in equity. So statement of change in equity. Then explanatory statement. Then explanatory statement. Clear, guys? This 5 things includes financial statement. You should not change the order. The following classes of companies are excluded from preparation of cash flow statement. Who are they? Small company, dormant company, OPC, private startup company. Private company which is a startup. These 3 are exempted from preparation of what? Preparation of cash flow statement. Clear? So first we have to write provision. What act is telling? First you have to write it. Then you have to write in the given case. Then conclusion. First, provision as per section 129 of Financial of Companies Act 2013. Financial statement includes balance sheet, P&L, income and expenditure in case of in case of NPO. Then cash flow statement, statement of change in equity, explanatory statement. The following classes of companies need not prepare are exempted from preparation of cash flow statement. They are small company, dormant company, OPC, and private startup company. In the given case, Geeta Private Limited is a private company with a startup. Okay, hence they are exempted from preparation of cash flow statement, but still they have to prepare balance sheet for the financial year. Everything you have to write the word for the financial year, for the financial year, for the financial year. P&L for the financial year, statement of equity, statement of change in equity, explanatory statement. Clear, guys? Hence, Mr. Pramod have to prepare above financial statement except cash flow statement, since it is a private company, is a startup private company. Geeta Private Limited is a startup private company. Clear, guys? Easy? Yes. Accounts of companies chapter is a very, very important chapter. Omitting accounts of companies, audit and auditors, management and administration is equal to failing in law. Okay. Next, incorporation chapter. This question, incorporation also 6 mark chapter. There are few chapters in law which have more weightage. Okay. I will tell that which are the chapters got more weightage. I will tell that at the end of the session. Okay. Mr. Aditya had incorporated 1% company on 7/7. So Aditya incorporated OPC. Mr. Yash was named as a nominee in the memorandum of said OPC. Now, Mr. Aditya, considering perpetual nature of the company form of business, desires to appoint ABC Private Limited as a nominee instead of Yash. See, I assume myself as Aditya. I have incorporated OPC on 7/7/21. Then I have to appoint a nominee also. Okay, I am appointing Yash as nominee. Then suddenly I consider perpetual nature. And what I am thinking, instead of Yash, I want to incorporate a company. Yash is an individual. Instead of Yash, I want to incorporate a company as a nominee. Okay, that is the question. Can Aditya do so? Yes or no? So first we have to write. Only natural persons who is Indian resident, whether resident in India or otherwise. So only first thing what? Natural person. Only natural person. He shall be a Indian citizen. Indian citizen, whether residing in India or not. Whether residing in India or not. Resident in India or otherwise. Only these people, all the three conditions, okay? Only they can be eligible to incorporate OPC. That is, they can be a member. And they can be the nominee. If you want to start a OPC, or you want to become a nominee in an OPC, you should be a natural person not with unsound mind like that. So you should be a natural person, Indian citizen, and resident in India or otherwise. Okay. If these three conditions satisfy, you can be appointed, you can incorporate a OPC because the member also same condition, nominee also same condition. Got my point? Now, Yash is a natural person, Indian citizen, resident in India or otherwise. Okay, let's assume he's a resident in India. Okay. Yes, appointment of Yash is valid. But appointment of ABC as a nominee, ABC Private Limited as a nominee is not valid. Okay. Right. Now let's see the question. Only natural person who is an Indian citizen, whether resident in India or not, shall be eligible to incorporate OPC, shall be a nominee in OPC. Taking the above provision into account, ABC Private Limited cannot be appointed as a nominee in OPC, as only natural person can be appointed as nominee. ABC Private Limited is not a natural person. Hence, the proposal of Aditya to appoint ABC Private Limited as nominee is not valid. Clear? Yes. Another important chapter, that is management and administration chapter. A and his wife as joint demat account in Brinda Private Limited. The company's annual general meeting is to be held on 28/8/2022. In such case, who will cast the vote in annual general meeting? Give your answer as per the provisions of the Companies Act 2013. Listen, nothing. In case of joint holders, how to say? Voting in joint shareholders. This is joint shareholders, right? Two people are having joint account. So joint demat account. So voting in case of joint shareholder shall be done in the order of seniority. What seniority? Age-wise seniority? Then there is no gender seniority, all are equal. Okay. Sir, there is no age seniority. Answer is no. Then whose name appears first in the register. Okay. Say for example, if this is the register, in that joint account is there. First, Naveen, my name is there. Second, Sai is there. Third, Venkat is there. Fourth, let's keep 3. So Naveen, Sai, Venkat is there. Okay. Then who shall cast the vote? Naveen shall cast the vote. Sai is elder than Naveen. Okay. But still, whose name has been named first in the register? Whose name has been first in the register? That too in chronological order only will come. If Naveen is absent for that meeting, unable to vote or is absent, then what will happen? Can Venkat come and vote? No, only in chronological order. Sai have to vote. Got my point? Okay, let's see. The voting in case of joint shareholders. What is the concept? Voting in case of joint shareholders shall be done in the order of seniority on the basis of what? In which their names appears in the register of members or shareholders. Joint holders have the right to instruct the company as to order in which their name to appear in the register. Joint holders have the right. Write my name in the first place. They can instruct the company whose name should come in first place. Okay. So they are having that right. Not company on their own, they'll write as, and then if myself, Sai, Venkat are there, company cannot decide Naveen name should be first. It is the shareholder who instructs, it is the joint holders who instructs the company to write in the register of shareholders, first name should be Naveen name, then Sai name, then Venkat name, like that. Okay. Right. In case of joint shareholders, polling paper shall be given to the first named holder. In his absence, joint holder attending the meeting appearing in chronological order in the folio. Folio means register. In this case, this is the provision. In case of A and his wife B, whoever name appears first in chronological order in the register of members shall be entitled to vote. What is the provision in case of joint holders? Voting in case of joint holders shall be done in order of seniority. That is the provision. Order of seniority means whose names appear first in the register of members or shareholders are entitled to vote. Then in the given case, Mr. A or his wife B, whosever name appears first in chronological order in the register of members or shareholder shall be entitled to vote. Is that clear? Yes. Next. Prabhas Limited is a company having its shares listed on a recognized stock exchange. So shares have been listed. The company has 5,000 members. Okay, we have 5,000 members. The annual general meeting is to be held on 7/9/22. As per the provisions of Companies Act, remote e-voting period and the time of closing of remote e-voting. First, you should understand the provision for e-voting. Okay. E-voting means electronic voting. Two conditions have to satisfy. Condition number 1. Your equity shares should to be listed in listed in SEBI. First applicability then only opening time, closing time and all. Okay. First applicability. Condition number 1, shares to be listed. And both conditions should satisfy. So I am using and. Condition number 2, members shall be not less than 1000, means shall be greater than or more than 1000. Okay. If two conditions are satisfied, that company can have what? Facility of remote e-voting. This is the provision. How you will write first, as per provisions of Companies Act 2013. Every company with shares have been listed in SEBI and company having members not less than companies having not less than 1000 members shall provide its members facility to exercise the right of vote on general meeting by electronic means. Facilitate members to exercise the right to vote. Simple right to vote on electronic means. Okay, that is e-voting. So if these conditions are satisfied, company will give the facility of right to vote in e-voting, that is electronic means. Okay, let's see. In the given case, this is the provision. In the given case, Prabhas Limited is a company having its shares listed on recognized stock exchange. So first condition satisfied. Yes, shares have been listed in stock exchange. Members are, the company has 5,000 members. That is, members are greater than 1,000. Yes or no? Yes. Two conditions satisfied. Hence, Prabhas Limited gives the facility to its members to vote, to cast their vote on electronic means. Clear? Then what is asking? And also advise remote voting period and the time of closing of remote e-voting. Okay, e-voting period and simple. When is meeting held? 7/7. So date of meeting? From there, 3 days. At least 3 days before, it shall be closed. From date of meeting, at least 3 days before, it shall be closed. Okay. At what? At least 3 days prior to date of meeting, e-voting shall be closed. Okay. At what? At 5 p.m. If date of meeting is 7/9/22, 3 days prior, 6, 5, 4. Then the meeting shall be closed on 4/9/22 at 5 p.m. E-voting shall be closed. Got my point? Let's see. In the given place, Prabhas Limited shares are listed in stock exchange. The company has 5,000. So it provides member facility to exercise their right to vote resolution proposed in means of electronic means. Thus, the annual general meeting of Prabhas Limited is going to be held on 7/9. The facility of e-voting shall open on 4/9 and close at 5 p.m. on 6/9. Oh, I'm sorry. Just a minute. I just said it wrong. Just one point. Date of meeting, when it shall open and when it shall close. Okay. So opening date, I said closing date. Actually, it's not closing date, opening date. When it shall be open? Open at least 3 days prior to meeting. Prior to date of meeting. Clear? And this is opening. Closing when? Closing a day before date of meeting. Prior date before day or previous day before meeting. Not previous day before meeting, previous day with date of meeting. So closing date is a day before date of meeting. Previous day from the date of closing. Okay, wow. At what time? At 5 p.m. At 5 p.m. Okay. Now the date of meeting is date of meeting when? You can write it here. Leave that. Date of meeting 7/9/22. What is the opening date? What is the closing date? When it shall be open? Provision what it said? At least 3 days prior to, I will put DOM in short, date of meeting. Then that is what? 4/9/22. Closing previous day of date of meeting. Previous day from date of meeting. That is 6/9/22 at 5 p.m. Closes. Clear? With respect to e-voting, first you should check whenever e-voting questions comes, first you have to check applicability. First you have to check applicability. What is the applicability of e-voting? The company shares to be listed in stock exchange. Members should be more than 1,000. Then only e-voting facility is provided to that company members. Okay. Then opening from date of meeting at least 3 days before. Closing previous day from the date of meeting at 5 p.m. it closes. Clear, guys? Next question. Not this. State the persons responsible for complying with the provisions regarding maintenance of books of accounts. One attempt, this question was asked for MCQ, the 2-mark MCQ, no? Case study MCQ. That question, this question came for 2 marks in one MCQ. One attempt MCQ. Generally, what is asking? Who are the persons responsible for maintenance of books of accounts? So, person responsible. Which chapter? Companies, accounts of companies. Person responsible for maintenance of books of accounts. Who and all? MD, first managing director, then old-time director, CFO, and other persons charged by the board. Okay. This is from section 128, chapter accounts of companies, section books of accounts. Section books of accounts. Person responsible for maintenance of books of accounts, MD, old-time director, CFO, and any other persons charged by the board. Okay, wow. Then this question over. Then we are getting into audit and auditors. Okay, wow. Mr. Govind Ram is a partner in charge and certificates of financial statement of P Associates. The firm is appointed as an auditor of firm Kanha Limited, a listed company. Mr. Govind Ram retires from P Associates after some time, joins Gupta and Gupta firm as a partner on 25/22. In general meeting of Kanha Limited held on 15/6/22, the company appointed Gupta firm as next auditor of the company. Advise Kanha Limited whether the company adhered to the provisions of Companies Act 2009. Simple, listen. One firm is there. P and Associates. Okay. They have been appointed as, in that one partner is there. Govindram name. Okay. Is the firm is the auditor. Is the auditor. For whom? For the company Kanha Limited. Kanha Limited. Listed company. For that Kanha Limited, P and Associates are auditor. Okay. Govindram is the partner. You all know, right? An individual can be appointed as an auditor for one term of 5 consecutive years. If only Naveen is a chartered accountant, I am not a partner in any firm, I can be appointed as an auditor for a one term of 5 consecutive years. No, I am a partner in a firm. Then that firm can be appointed as an auditor of 2 term of 5 consecutive years. You should not tell us 10 years, you should tell us 2 term of 5 consecutive years. Okay. For individual, 1 term of 5 consecutive years. And for firm, 2 term of 5 consecutive years. Okay. After that, some cooling period gap will be given. After that, we can reappoint the same individual or a firm. Okay. See, if the P and Associates are there, it is a firm, right? So they will be auditor for Kanha Limited for a period of 2 term of 5 consecutive years, which is nothing but 10 years. After 10 years, there should be a cooling period between P Associates and Kanha Limited. Okay. Right. Now, Mr. Govindram is being partner here. Next, Kanha Limited is not appointing P and Associates again, but it is appointing Gupta and Co. Gupta and Co. In that Gupta and Co, this Govindram goes and joins as a partner. What is the purpose of giving the cooling period? There shouldn't be any attachment between the auditor and the company. Right? Auditor should be free, should be independent in decision making. For that purpose, we are having cooling period. Again, this Govindram from P Associates is being the auditor for Kanha Limited. If again he goes to Gupta Limited and I am appointing Gupta Limited, again that Govindram will come, but in the name of Gupta and Co. There is no point of doing that. Therefore, this appointment is ineligible. Clear? Either he should not join. Okay, Gupta and firm will be ineligible to be appointed as an auditor of Kanha Limited for a period of 5 years. Cooling period is 5 years. Okay. For 5 years? No, sorry. Since Govindram joined as a partner in Gupta and Gupta, we cannot appoint. So, cooling period of 5 years should be there. Understood? Right. Now, Indian Contract Act, that is bailment chapter, Vishal bailed 50 kg of high quality sugar to Naresh. So, who is a bailer here? Person who delivers the goods is called as bailer. Here, Vishal is bailer. Who is bail here? Naresh. Okay, wow. Who owns a Kirana shop, promising to give 200 at the time of taking back the goods bail. Vishal is giving 50 kg of high quality sugar is giving, okay, to Bailey. When I take back for consideration, okay, so non-gracious bailment, 200 rupees I'll give back. When Naresh was not in the shop, his employee was unaware of the bailed sugar of Vishal and mixed 50 kg of sugar belonging to Vishal with the sugar in the shop and packed it for sale. When Vishal came asking for the sugar, he bailed with Naresh as the price of specific quality of sugar had terrible. What is the remedy available for Vishal? See, Simple question. Without the consent of bailer, bailee should not provision. What is the provision? Without the consent of the bailer, bailee cannot mix the goods of bailer with own goods. That is, without the consent of Vishal, who is a bailer, bailee, that Naresh, should not mix the goods bail, that sugar what Vishal gave, with his own goods. He should not do that. Okay? He's telling you to take care of the goods. That goods you are mixing with your own goods. That is not possible. Sir, Naresh did not do, sir. A employee only did know, sir. Naresh was not aware of it. So what? You charge your employee, but Naresh is solely responsible. What Naresh have to do? Come on. Say for example, Naresh is a ladies. He sells what exclusively ladies sandals, slippers, and Vishal sells only gents slippers or sandals. If the employee mixes gents slippers with lady slipper, which is separable, we can identify, yeah, this is gents slipper, this is lady slippers. We can separate it. For that, separable cost will incur. I will appoint one person. You have to separate. I will give something. Or that separable cost is incurred. Or without separable cost, even the Naresh can itself do that. Whatsoever the case may be. Only the separable cost will be backed by Naresh. Yeah, it is my mistake. I am the person who mixed the goods, your goods with my own goods. So I will bear the separable cost. If goods are in separable nature, Naresh will bear only the separable cost and return back the goods after separation. Yes or no? He will give, here is your gent slipper. Have this. I will bear the separable cost. But goods like rice, sugar, it cannot be separated. It cannot be separated. Then what we will do? Come on, what we will do? It is loss. So Naresh here, when goods are not in separable nature, then separation cost won't be there. The bailee have to bear the entire cost. Understood? Okay, let's see. If bailee, without the consent of bailer, mixes the goods bailed with own goods, no, impossible to separate the goods bailed, then who shall be liable? Bailee shall bear the loss for the goods. In the given question, Naresh employees mixed high quality sugar by Vishal, then packed it for sale. When sugar mixed cannot be separate, Naresh employee has mixed two kinds of sugar. Naresh must compensate Vishal for the loss of sugar. Understood? Clear? Yes. Then we get into just the last page. Cannot see the last page question. Yes. It's coming. How will you interpret the definition in statutes? The following word used in statute. Means, includes. Simple mark. Means only that. Nothing comes addition. So, means a restrictive or exhaustive definition. Only that particular thing. Nothing other than, okay. Includes means inclusive nature. Includes means inclusive nature, extensive. Okay. Extensive meaning, which also include the meaning. So, which also includes the meaning of assigned definition to that. Example you can write. Simple means exhaustive definition. Restrictive or you have to write restrictive or and exhaustive. Includes means inclusive in nature. Extensive. Extensive. Write this. Hardly this question they will ask you for 2 to 3 mark. Maximum 2, minimum 2, maximum 3. You write this and write one example. Company means company incorporated under this act or previous company's laws, or director means a director appointed by the board of the company. Means exhaustive definition. Write this example. Next, old time director. Old time director includes a director who is in old time employment of the company. So give one examples. Clear? All right. Yes. Next. Next, we will see this question. When can be preamble used to aid as an interpretation of statutes? What they are asking is, what is preamble? What is preamble? Preamble is used to know the aims and objective of the law. What is the purpose of creating this law? Okay. Preamble is used to know the aims and objective of the legislation. Clear? Second point, preamble helps to identify or ascertain the intention of the lawmaker behind it. Okay. So preamble helps us to understand the intention of the lawmaker. So here we can understand the intention of the lawmaker. Can preamble override the enactment, override the provisions? Answer is no. See, provision or enactment is a brief summary. Correct. A provision contained in act is a brief summary. Provision contained in the act is a brief summary of legislative objective. Preamble is just in the science practical will tell no aim, objective, like that. So preamble is like that. With the help of preamble, we cannot get full clarity. We will just know why this law, what is the objective of this law, what is the intention behind the lawmaker for creating this law. Always remember, preamble cannot override the legislation. Preamble cannot override the legislation. Okay, right. Recording lectures is a biggest task, suddenly some unnecessary sound noise will be there. What to do? Okay, we have to overcome and override everything. Next question. Ayush and Vipul are good friends pursuing CA course, our course. While doing group studies for the paper Corporate and Other Law, how? They got confused about the provisions of Section 3 of the Companies Act. Section 3 provides company may be formed for lawful purpose. Both Ayush and Vipul are difficult about the meaning of the word may, whether it could be taken as mandatory or directory. General Classes Act, this question is from. Okay. Always remember, may means mandatory. Sorry, may means recommendatory. That is optional. Optional. May means optional. Shall means, shall or must means mandatory. You can write it as either directory, also optional, or directory. General meaning. This is general meaning. Our opinion may means I may come or may not come. Maybe in our Katija style. Okay, so may is just optional. Okay, but shall or must is mandatory. Yes or no? Yes or no? This is what we know. Company may be formed for lawful purpose. What is the meaning? It is optional. May be for lawful purpose, may not be for lawful purpose. That is for unlawful purpose. Okay. That's why our interpretation should be like, in certain cases, in interpretation chapter, we will tell it as a rule of exceptional construction, but still they haven't mentioned anything about the rule of exceptional construction. I will tell. Sometimes may shall become, may might become shall, and shall become may. That is, in certain cases, may be used to interpret as mandatory, and shall we used to interpret for optional. Okay, that's why in the given case, may should be taken as mandatory force. Company may be formed for lawful purpose. Now, in this case, may shall be interpreted as mandatory. Okay, right. Generally, may and shall, what a meaning? May means optional or a directory. Shall is mandatory. While interpreting some other case, some cases, we will may becomes mandatory force and shall becomes optional or directory force. The wordings are important. Generally, may means optional or directory force. Shall may be mandatory force. However, while interpreting some words, sometimes in interpretation, what we do? We will consider may as mandatory force and shall as optional or directory force. Then you have to write in the given case, the word may should be considered as mandatory force. Law will never allow formation of company for why? Because law will never allow a company to form for unlawful object. Then you can redefine definition, no? But what to do? They will interpret like this only. Clear this question? Yes. Then, okay, very good question. Vishal Limited has paid dividend consistently every year at a rate of 10% of equity share capital in last 5 years. That is 15-16 to 19-20. The company has incurred loss in current financial year 21-22. Still it want to declare dividend. Still it want to declare dividend. What they are telling, for last 5 years, they declare dividend at a rate of 10%. Current year, they incurred loss. That is insufficient profit. Can still the company declare dividend? Answer is yes. How? Provided it satisfies the following condition. Provided it satisfies the following 3 conditions. What are those 3 conditions? The rate of dividend declared in the current year shall not exceed the average rates declared by the company in the 3 years. So every year they give 10% for 5 years. So I will take 3 years. 10 plus 10 plus 10 by 3, which is nothing but 30 by 3. So 10%. Same it's going to come in here. So the rate, this is my what? Average of 3, average rate of 3 immediately preceding financial year. Okay. So the rate in current year only I am having loss, no. The year in which I am having loss, that rate shall not exceed the average rate of dividend. First condition. Second condition, my maximum withdrawal shall not exceed 10% of paid up share capital plus free reserves. So this is first condition. What is second condition? Maximum withdrawal. What is my maximum withdrawal? 10% of paid up share capital plus free reserves. Paid up share capital plus free reserves. That shall be my maximum withdrawal. After withdrawal, balance will be in reserve, no? Say for example, in reserve I have 1000 rupees. I am withdrawing 300 rupees. Then balance 700. That is balance, that is called as balance after withdrawal. That balance after withdrawal shall not fall below 15% of paid up share capital alone. Here only paid up share capital, 15%. Condition 3, only 15% of paid up share capital. Say for example, my paid up share capital is 1000 rupees. In that 1000 rupees, 15%, that is 150 rupees. My paid up, that 15% of paid up share capital is rupees 150. The balance in reserve shall not be less than 150. How much balance I am having now? I am having 700 rupees. What provision is telling? Your balance in reserve after withdrawal. I come again. Balance in reserve after withdrawal shall not fall below 15% of paid up share capital. Paid up share capital is 150. It shall not fall below 150. It should be above 150. I have 700, which is above 150. Not my point. Clear? Yes. Next, we are getting into Krish Limited created a charge on its assets on 2nd February. However, company did not register the charge till 15th March. What should be the procedure? So first, define charge. We will write the definition of charge. Charge is interest or lien created on the assets of the or undertaking of a company which is within India, outside India. Assets can be tangible, intangible. We'll all be writing here. However, this charge is created on or after 211. The tabular column chart will be there in your ISM. Charge created after 211/19. What they are telling? Within 30 days, you have to register. If not registered within 30 days, pay additional fees, and register. Further period of 30 days will be granted. So, further 30 days. Or I can tell it as 60 days from date of creation. Within 30 days from not from this date, generally from date creation, within 30 days, I have to register the charge. Okay. If not registered, further period of 30 days will be given with payment of additional fees. I can register. That further period 30 days, 30 plus 30. Instead, I can tell 60 days from date of creation. From the beginning, date of creation. So 60 days from date of creation. Got my point? Okay. So when charge was created? 2nd February. Company did not register the charge till 15th March. So what they have to do? Additional fees they have to pay. Correct. Particulars. About 2nd February, within 4th March, they have to register. Period of 30 days. If not registered, they have to pay an additional fees for further extension period of 30 days. Right. So that's what we do. Same thing applies for 27th May. Okay. Charge created in that case. Just give a reading to this section. Okay. This is the main provision in that. Very, very important. It will make you to think this question. Simple question from incorporation chapter. Abhi is a chartered accountant and MBA by profession. Chartered accountant and MBA by profession. Has been appointed as an executive director for XYZ Limited. His job profile includes advising board of directors of the company on various compliance matter, strategies, business plans, risk matter relating to company. Keep the view of above position whether Abhi can be classified as promoter of XYZ Limited. Examine the provision under. They are telling this Abhi is a chartered accountant as well as an MBA. He has been appointed as an executive director in XYZ Limited. His job is to advise board of directors, advise board of directors in various compliance, strategies, business plans, and risk matters relating to the company. Define promoter. First, we will learn who is promoter. Promoter means always remember A, B, C. A for who has been named in annual return. Who has been named in annual return. Who has been named in annual return. Who has been named in prospectus and annual return. That is A. B, whose advice board of directors accustomed to act. So B for board of directors accustomed to act. C for who has control over the affairs of the company directly or indirectly to the shareholder director. Come on, tell along with me, who's a promoter? Promoter means a person who has been named in the annual return and prospectus, or who has been, whose advice board of directors, B for board of directors comes to act, C for control, who has control over the affairs of the company directly or indirectly. Persons acting as a mere professional cannot be appointed as a promoter. Person acting mere professional cannot be appointed as a promoter. As the job of ABI is only limited to advise board of directors on various compliance of strategy, business plan, risk matter to business of the company, that too only in a professional capacity, he will not be classified as a promoter. He will not be classified as a promoter. He's a chartered accountant, right? And he is also advising, even though he is, you may think, he is advising board of directors. No. Only advise board of directors on various compliance matter. Okay. But business and risk planning, that too in professional capacity. So person with professional capacity cannot be appointed as a promoter. Here, Abhi is a chartered accountant and MBA by profession. Is doing that in a professional capacity. Is advising board of directors in professional capacity. Therefore, and he is also a professional, he cannot be appointed as a promoter. Got the point? Clear? Yes. Next. One of the matters contained in article of Demon Foundation incorporated as a limited company under Section 8 was altered by passing special resolution in general meeting, thereafter intimating the same to the registrar. However, such alteration in article was opposed by Dawaj and Co., a partnership firm which is a member of such alteration was not valid. He was proposing that. I will read the question. Advice as per the provisions of Companies Act 2013, whether the contention of Dawaj and Co. was valid, whether it can be the member in such company. See guys, in Section 8 company, a firm can be a member. A firm can be a member. Okay. So here, Dawaj and Co. is a partnership firm. They are asking whether the contention of Dawaj and Co. was valid, first point. And second, whether it can be the member of the company. I'm answering to the second point. Whether Dawaj and Co. can be the member of the company. Section 8 says, the provisions of Section 8 of Companies Act 2013 says, a firm can be appointed as a member in Section 8. A firm can be a member in Section 8 companies. So what is the answer for this? Yes, Dawaj and Co. can be the member for Section 8 companies. Next. One of the matters contained in article of, if you want to alter, if Section 8 companies want to alter the MOA or AOA, whose consent is required? First, the consent of central government is required. But what they did, what that OPC, Demon Foundation did, Demon Foundation, by passing special resolution, they altered. But what is the provision telling? To alter MOA, AOA, consult of central government is required. Consult of central government is required. Okay, that's what they are telling. But they are not telling you can pass special resolution and you can alter. They are telling first you have to get the consult of the central government. Without getting consent of central government, you cannot alter MOA or AOA of the Section 8 company. So what Dawaj did? Dawaj said, alteration of article, that is Dawaj, that partnership firm. That partnership firm can be a member in firm. Now he will be called as member. The Dawaj and Co. said that such alteration is not valid. Arey bhaiya, that alteration is not valid. Like that, who's telling? Demon Foundation is Dawaj and Co is telling to Demon Foundation. There is section 8, we have to first alter. If you want to alter MOA, AOA, you have to get approval from, whom? You have to get approval from central government, man. First get the approval from central government, then you can alter. But passing special resolution is not valid. Therefore, Dawaj and Co said it is not valid. What Dawaj and Co said was correct. That is the question, right? The contention of Dawaj and Co was valid. Yes. Dawaj and Co, they didn't alter the Demon Foundation only altered MOA by passing special resolution, and same they communicated to the registrar. Dawaj and Co, they went and said, no, what you did is wrong. You have to get first permission from central government. Then only you have to pass the resolution, they said. Then only you can, after resolution, you can alter. First, you have to get consent from the central government. Therefore, what Dawaj and Co said was right. Okay. And this question, very important question. There shall be, in deposits chapter, there shall be certain items not considered as deposits. Rindal Limited is a company manufacturing orange and strawberry candies for kids. Now the company wants to expand the business and start a manufacturing of 10 more type of candies. Irrelevant. The company has raised 1 crore through issue of non-convertible, non-constituting asset of the company listed on a stock exchange where regulations are made by SEBI. Above amount of 1 crore will be considered as deposit. The amount of 1 crore is considered as deposit or not. In certain items will be the items not considering deposits issued by RBI in deposits chapter. Those items are not termed as deposits. Other than that, everything is deposit. Let's see, an amount raised by issue of non-convertible debenture not constituting a charge on asset listed company shall not be considered as deposit. So how I took a regular badge. When I took regular badge, I said, guys, always remember three things should be there. It should be non-convertible debenture first. Second, not constituting charge on assets of the company. Charge on assets of company. Third, it should be listed on recognized stock exchange. It should be listed. So first condition, non-convertible debenture, yes sir. Not constituting charge, yes sir. Listed, yes. Then it is not a deposit. Same thing applies here. Therefore, it is not a deposit. So will not be considered as deposits. Hope you all enjoyed this session. It's almost 3:40 p.m. early morning. You know, Shivratri is going on. I'm taking a, the day of Shivratri, I'm recording this. So, wishing you all all the best for your exams. Okay. Law, we got 2 days leave. Don't think 2 days holiday, paper will be tough. If you are prepared well, even 5 days leave, how much stuff they can ask, you will be able to answer. Conceptual learning, law. Mere memorization won't help you. Okay. You have to practice more RTP, MTP, past attempt question paper with respect to other law and even for the corporate law. Okay. Practice well. Take care of your health. All the best. Thank you.